The average monthly car loan payment in the USA is $742 for new vehicles and around $525 for used ones. Now this is as of the fourth quarter of 2024, but it's safe to say that around $742 is the average amount of a monthly car payment in the United States. Now in this video we're going to be going through and I'm going to be sharing with you guys how many shares of multiple different ETFs, some high yielders, some low yielders you would potentially need to buy into in order to have the dividends alone cover your entire car payments on a monthly basis. Now this is 100% something that all dividend investors should be thinking about and something that I definitely was thinking about in my early days of investing. You see, right now I earn around $7,900 per month in dividends on a monthly basis. But even back in the day when I was only earning say $50 per month on average or even $100 per month on average, I myself was looking at different bills that I had to pay on a monthly basis and asking myself how many shares of X, Y, or Z stock or ETF would I potentially need to buy into in order to have that dividend cover my entire payment, maybe and then some. Now, as dividend investors, a lot of us are chasing financial freedom, and once you get to the point to where you own enough shares of enough stocks and ETFs across your entire portfolio, you then could potentially be at a point to where you could use your dividend income alone to pay for all your bills and then some. So if that's something that interests you, if that's something that you guys want to do in the future, well then make sure to stick around, drop a link down below, and let me show you how this works. My A to Z dividend investing ebook has helped countless dividend investors get started with their journey, and my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z dividend investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. So once again, we're going to be going off of a $742 car payment, which again is just the average. Maybe yours is personally more or less, but again, this is just sort of instructions on how you can figure out the math and see exactly how many shares of whatever ETF or stocks you need to buy into. So the first ETF that we're going to talk about, VTI, the Vanguard Total Stock Market ETF, which is a very, very low yielder at 1.19%. Now this ETF is obviously much more of a growth ETF, but we're going to start off with some lower yielding options. And then as the video goes on and on, we're going to go into some very, very high yielders. Now based off of the last dividend payment from VTI, 94 cents per share, and this is paid out on a quarterly basis, you would have to divide that by 3 and then divide that by $742, which in theory with that, you would need 2,393 shares of VTI, which would cost you $677,000 in order to pay for your entire auto loan, just with VTI dividends alone. Now the next ETF that we could do this with is VU, the Vanguard S&P 500 ETF, another super high quality ETF, one of my favorites. And side note guys, if you do like dividend investing, check out some of my other videos because that's all we talk about here. Now VU, the Vanguard S&P 500 ETF, is again a low yielder at 1.21%, but again this is much more of a growth ETF. Now, based on VU's current dividend payouts and based on VU's current price, you would need to buy 1,201 shares of VU in order to cover your car payment with the dividends, or $683,000. But I promise you guys, the next ETFs are going to make it much, much easier. The next ETF that we could use to pay our entire auto loan is SCHD, or the Schwab US Dividend Equity ETF, which yields around 3.6%, so you're getting much, much more cash flow when it comes to this ETF. Now, based on SCHD's current share price and the last dividend that was paid, an investor would in theory need to buy 9,275 shares of SCHD or spend $259,000 on this ETF in order to have the dividends alone cover their entire car payments. Now look at that difference so far. We're still not even near anything high yield, and it's already getting much, much cheaper in theory, of course, to allow the dividends on a consistent basis to cover your auto loan. Now next up, we have a much, much higher yielding option. We have the JP Morgan Equity Premium Income ETF, or JEPI, one of my favorite higher yielding ETFs that I personally have held in my portfolio for a long, long time. Now based off of the most recent dividend payout, JEPI currently yields around 8%. The last dividend pay was 32 cents per share, and this is on a monthly basis. Now, based on JEPI's current share price and based off of the most recent dividend payouts, we're talking 2,318 shares. That would be enough shares to cover your car loan. Or in theory, you would have to invest $134,000 into JEPI and then have your auto loan covered by the dividend every single month. Now, again, just as a side note, this is how the rich people buy things. They don't buy things with active income. They buy into assets, get paid passive income from something like JEPI, VU, VTI, etc., etc. And then with those dividends on a monthly or quarterly basis, then if they are making enough money from the dividends, they'll buy a car, they'll buy a boat, they'll buy a plane or a watch, or whatever the case might be. Another high yielder that's going to make it even easier potentially to cover your entire car loan with just dividends alone is one of my other favorites, JEPQ, or the JP Morgan Nasdaq Equity Premium Income ETF, which yields around 12%, 11.4% as of recent. Now, the most recent monthly payout from JEPQ was 48 cents, and this is for an ETF that costs around $53 per share. Now, based off of the most recent price of JEPQ and based off of the most recent dividend payouts, in theory, an investor would need around 1,545 shares of JEPQ in order to cover that entire $742 auto loan, or around $84,000 invested. Now, this is again sort of how the rich get richer. Instead of buying an $84,000 car, let's say, you could instead in theory invest $84,000 into an income producing asset, which then will pay you dividends on a monthly basis. Now, at that point, you could use those dividends to pay for things like bills, buy a car, or whatever the case might be, or of course, you can reinvest those dividends into more and more shares and compound your portfolio that way. But now we're getting into some super high yield territory. An investor could also buy into the SPYI ETF or the NEOS S&P 500 ETF, which yields over 12% as of right now and pays investors on average around 50 cents per share per month. Now, with SPYI's current price and based off of the most recent payout, an investor would have to buy around 1,454 shares of SPYI or spend around $71K in order to have their car payment basically covered. The next ETF yields over 14%, so in theory, this amount of cash flow is going to make it even easier. We're talking about the NEOS Nasdaq 100 High Income ETF, or ticker symbol QQQI. Now, based off of QQQI's most recent price and based off of the most recent payout, an investor would have to only purchase around 1,236 shares of it, or spend around $62,000 in order to have that monthly income cover your entire payments. Now, last but not least, I thought it'd be kind of fun to go through the math of an ultra high yielder. We're talking about MSTY, the YieldMax MSTR Option Income Strategy ETF, which has a distribution rate of 121%. Now, this ETF as of recent paid $2.02 for every single share that you owned, and this was paid out sometime in February. Now, based off of the most recent price of MSTY and of course based off of that $2.02 payout, an investor in theory would have to purchase around 371 shares of MSTY or spend around $8,000 in order to have their car payment paid for. Now, I think it goes without saying that some of these ETFs are going to carry more risk than others, and you 100% should do your own research on all of these. And again, these are just based off of the most recent numbers. Things can change, dividends can get cut, dividends can grow, etc., etc. But it is sort of fun to look at different ETFs, for example, and see exactly how many shares of what you would need to buy in order to have ETFs dividends cover your entire car payments. Now again, whether it's your car payment, your mortgage, your rent, your electricity bill, whatever the case might be, I do think it's very useful to build out a long-term income producing portfolio of different stocks and ETFs that can in theory cover all your bills and then some later on in the future. So now that we went over multiple different ETFs and I share with you guys how many shares you would need in theory to cover your entire car payments, I lastly, most importantly, have a question for you guys down below. When it comes to income producing stocks and or ETFs, what's your number one favorite stock or ETF as of right now across the market? Drop the ticker symbol in my comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.